Hello and welcome to this very special series, Finance Made Simple. Joining me today is Tarannum Hasib, who is the Chief Distribution Officer at Canara HSBC OBC Life Insurance. Thanks very much, Tarannum. It's a pleasure talking to you. Tarannum, the capital gains tax, which has been introduced on ULIPs, how does that affect the attractiveness of a ULIP? You know, there have been a lot of reforms in this product. There was a time and you would know this since you've been around for a while now, that the charges were very, very high. People felt that they were ridiculously high initially when they came. Over the years, these charges have been brought down. But ever since the capital gains tax was introduced on, say, mutual funds, which is a competing product, if I may say so, though you may disagree with that. But there was a feeling that ULIPs have now become more attractive because the income that you get is completely tax-free. How does the new tax or bringing it on par with a mutual fund now make a ULIP? Does it make it less attractive now?
So, Vivek, you were right when you said that, you will not agree that insurance and mutual funds are at same category, because, the category of the investor and the need is completely different, because, one is a short-term perceived product. And while people, of course, do invest long-term also in mutual funds, but insurance, definitely the need is very different. It's a long-term product and the goal-based scenario is very different. As far as ULIPs are concerned, I think ULIPs are still very attractive. Because, the options which the ULIP provides to the investor in the multiple category of funds, which it offers you, and, equity, growth, balance. So multiple types of funds available to an investor, and charges are very competitive in the product charges as well as the fund management charges. Both are extremely competitive in ULIP products. So which actually gives a consumer an option to optimize returns very effectively. Along with that, you of course have a sum assured, which is a 10 times multiplier. So you get a sum assured with it, which is not available in any other product. So it actually gives you two benefits at one go. One is you optimize your returns, plus you get a sum assured along with it, and up to 10 times and even more if a customer really chooses to. So that is one thing which is very helpful. Also, a lot of customers, especially savvy ones, and they really like to switch and see how the market moves, and do they want to lock in their returns and move to a maybe a less aggressive fund or a more aggressive fund. And also bases your life cycle. When you're younger, you have an option to go to a growth fund. As your life stage moves on, you can actually go to a less aggressive fund. Now, all these switches do not come at a cost in terms of taxation in ULIPs. And most of the insurance companies give a lot of switches free as well. So this is very attractive, especially for a consumer who wants to maximize and optimize his returns. So this is not available in any other vehicle of investment. And then tax exemption. So while we say, this 2.5 lakhs has brought and opened up a tax Pandora discussion, but ATC exemption up to 1.5 lakhs still continues with all insurance products, including ULIP. So that stays. And also under 1010D, exemption has gone away only for people who are investing more than 2.5 lakhs in a year. So if you look at insurance companies, I'm not sure how many people actually pay 2.5 lakhs worth of premium year on year. So a large section of the consumers will still benefit from 1010D directly. And of course, in terms of demise of the life of the investor, again, these overall proceeds on maturity are exempt under 1010D. So I think ULIPs are still very attractive. And if I may add, Vivek, is, earlier insurance was a tax vehicle, tax saving vehicle. The awareness has moved on from there, and especially in the segment where people are wanting to invest higher sums. They don't invest only for taxation, they invest for multiple other reasons, in terms of long-term returns and stuff like that. So I think while, of course, there will be a small segment which may get impacted, but I don't see a major impact, and ULIPs will continue to be very attractive even going forward.
All right, Tarannum, we leave it there. Thank you very much for joining me and sharing your thoughts and perspective on a very, very important subject. Thank you once again.
Thank you so much, Vivek. It was a pleasure. Thank you.